The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and thanks for joining today's Lunch and Learn with Binary Stream. Today we have Brian Morris and Don Ramsey who will be presenting, and my name is Allie Phillips. I'll be the host. A couple of things to go over before we get started. This will be recorded, so if you have any follow-up questions, I'll send it out to you, and you can feel free to give me an email back, and we can follow up on that. Also, if you have any questions, please type them out into the questions or chat windows on the right side of your screen, and we'll answer those at the end. And with that, I'll hand things over to you, Brian.
Excellent. Thank you, Allie. Good morning, everyone, or good afternoon. I'm on the West Coast, so it's still 9 o'clock for me. Thanks for taking the time out of your day to join us. So today we're going to be talking about our most dynamic product, Subscription Billing Suite. We're going to talk about some of the background of it, what it is, and how it can help you become more successful. And then my colleague Dawn, who's the sales engineer, is going to take you through a live demo. Okay. Here is our agenda, which I pretty much just covered. So in terms of a bit of background about who Binary Stream is, we are Canadian, in case my accent didn't give it away. We're based out of Vancouver, and we've been developing GP solutions for 19 years now. So we've been around for a while, just as the TM group has. Our flagship product is multi-entity management, which some of you might know, but the second biggest product that we have is the Subscription Billing Suite, and it helps people in a number of industries be more effective. So let's take a look at some of those ways that it happens. GP has, of course, some out-of-the-box billing and deferral capabilities, but let's be real, they are rudimentary. In order to get through the day, most of our customers, I find, are still using Excel or other manual processes before they discover our product and then have a chance to eliminate them. We can completely streamline and speed up that entire quote-to-cash cycle. So not only are you eliminating the manual tasks and potential for data error, but revenue leakage is something that might sound gross, and it is bad for your bottom line. We can eliminate the need or the possibility of you missing out on revenue or a prescribed price increase that your customers agreed to, but because of human factors, you might not capture that revenue. No more with our product. Another thing that's timely is that third bullet point. For those of you that are accountants, you're probably familiar with the changes brought by ASC 606 or IFRS 15 if you do business internationally. Essentially, those talk about revenue from customers with contracts and the rules pertaining to how revenue can be recognized when there's multiple line items and how, say, something like a discount can be applied. Dawn's going to get into that during the demo, but keep in mind that we do have a solution there. So what is the Subscription Billing Suite overall? What are its components? Well, here they are visually on the screen. As you can see, there's three basic high-level groupings. So respectively, they are ARC-B, Advanced Recurring Contract Billing. That is the brains of the billing engine. So this is where you can specify both at the header and at the line item level the different frequencies. So it's very easy for us to combine a one-time item with an annual plan, maybe a monthly charge, etc. For things like usage-based billing, like think bandwidth or throughput or number of technical support cases, all of those can be calculated using your external provisioning system, whether that's from another program or manually from clipboards from frontline technicians. In any case, once that information is recorded, it can be imported into our system, and we can bill correctly, accurately, and quickly based on those parameters that you've set up. We also have the MRR report, as you'll see, that allows you to get a quick visual indication of what your revenue is for this month, for future month projections, and for things like churn. If you have customer drops or ads, you want to know why in a timely manner. This will help you make better decisions with that data. The next phase would be ARED, because we like our acronyms, and that's the Advanced Revenue and Expense Deferrals. It does work on the expense side. Most commonly, though, people are concerned about the revenue, especially in people that are in software or software adjacent industries such as telcos, etc. Very commonly, you'll be doing something like a quarterly or an annual billing. So your customers are prepaying for, say, 3 or 12 months. But of course, that puts you in a rev rec situation where you have to defer that. You can't recognize it up front. If it's straight line, that's pretty simple. People do that through Excel all the time. not that much of a hassle. But what about more complicated ones? And by that, I'm referring to things such as event-based recognition. What if you're doing professional services and you want to recognize 25% upfront, say 50% when it's the go live, and then a final 25% 30 days afterwards to flesh out any concerns? That can easily be set up as a template and then attached to a particular item. So when you sell that service bundle, there's no more guesswork. It automatically knows that it's going to be recognized by a 25, 50, 25 method at the dates that you choose when those things happen. Of course, there's a lot of auditor-friendly reports. If you've ever been through the Don informs me, he's a former accountant, that it's a very fun procedure when the auditor comes knocking and asks you to prove what your deferral balance was on a particular date, say 6 months ago. You're going to be there for a while. No more with our product. You can simply enter in the as of date, and we're going to give you the exact deferral balance down to the very penny, along with all the associated documents, all the journal entries that are associated with that. So it's a huge time saver and potentially going to get you out of some sticky situations. Finally, Mira, there's just a single bullet point related to that because it just does one thing, but it does it very well. So Mira, or multiple element revenue allocation, that is the one component that really helps you be ASC 606 compliant. So from there, as you'll see in the demo, we can set up different methods of reallocating the revenue on a particular contract. So if you, let's say, sell 3 items, but you give one of them away for free, obviously in the accounting world, nothing is truly free. This will give you different options to reallocate the revenue according to either a percentage of the list price, percentage of the discount, or whatever method makes sense. Here's just a visual overview of some of the things I was talking about, just where it shows the difference between what's available in GP out of the box versus what's available with GP and our solution. So here it is for the billing side, as well as the revenue side. All right, so that basically covers the product in an abstract sense. Let's make it a little bit more concrete and talk about some situations. So Hooli Computing, if any of you have seen the show Silicon Valley, that's where we got the name. It's a data storage and cloud computing company based out of Silicon Valley. They have some very flexible data billing models that give them a competitive advantage over the rest of the people in their space. So they have, for example, the ability to set a cap at certain levels, but also have a min amount. So let's say their basic plan, which costs $300 a month, that automatically includes 30 gigabytes of throughput that are free, but then any additional gigabyte afterwards, they're going to charge $5 per. That's easily calculated. It's set up once, and then everything gets imported, and it balances out correctly. Some of the metering requests then become irrelevant because all of that just gets tracked within the external provisioning system and imported in. So it eliminates the need to track that manually. In terms of forecasting for their monthly recurring revenue, right now, it's a Byzantine process. They're taking information from their CRM system where the contracts originate. They're taking that, dumping it into a spreadsheet, but then they're also comparing that and doing this big pivot table where they're looking at the actual data from GP and trying to reconcile what's forecasted versus what's actually been recognized that month. It's a process. It kind of works, but it takes a lot of effort each month in order to make sure that they're accurate and they have one version of the truth. Finally, looks like I have only a sentence fragment there for the third one. Managing revenue, deferred revenue expenses is tedious and requires, it's so tedious that they forgot to finish that sentence. So what happens is you have to maintain that spreadsheet and review it all the time. As I mentioned before, for fear of an audit, if you don't have the correct deferral balance, it can be very time consuming. Because we have the ability to link that deferral schedule automatically to the item, of course it can be overwritten before it's posted, but we have the ability to make sure that the correct deferral schedule is automatically going to be linked to that item anytime that it's sold. So it's one thing to talk about these concepts with a hypothetical company, but if you're like me, seeing really is believing. So that's where Don Ramsey is going to come in and illustrate some of these concepts. Don?
All right, just need my screen.
Oh yeah, let me make you the presenter. And you should have it now.
I do indeed. Make sure I pick the right one. And please let me know if you're seeing the GP screen.
I do see it now.
All right. So we'll follow through on the scenarios that Brian talked about, but I do want to give you a bit of background on how our products work along with GP. You'll notice I'm at the home page here. If I click on the financial page, it's going to be very familiar with all of you who are used to using GP. If I want to go down to the contract billing page, or module, if you will, there's the advanced recurring contract billing module. The reason it looks and feels like GP right off the bat is because it's coded in exactly the same language. So it is truly a module of your GP world. So the learning curve is very short. There's not a lot of new things to learn other than, hey, how do I create a schedule? How do I invoice for a schedule? And that type of thing. Now, for the purpose of today, we're not going to spend a lot of time on setup and configuration. That's kind of your set it and forget it process. If it's all right with everybody online, we're just simply going to go into an actual contract, take a look at how to set some items up, the flexibility of those items. We'll even take a look at how to invoice for them and how that gets tracked back in the ARC-B module. And then, of course, we'll talk a little bit about advanced revenue and expense deferrals and how that ties together both with ARC-B and with the MIRA, the ASC 606/IFRS 15 capabilities as well. All three of those products that Brian mentioned are standalone capable, but they work extremely well together as a particular unit. So starting off with contract billing, let's go look at an actual schedule. I've started one here, a new one just for the purpose of this webinar, and I'll explain what's going on along the header and give you some ideas as to what kind of information is captured. I'll also explain what happens down under when you get to the detail where my mouse is circling here. So first of all, this is multi-entity management, our flagship that Brian mentioned earlier. This is company 0. If you only have the one company in GP, you won't see this, it just simply won't be there. If you have multiple companies and you're already using multi-entity, then this will allow you to have a contract assigned to a particular company in a single GP database. Schedule type, I've got mine called demo, but you'll see there's a few here. Schedule type is a great way to sort your contracts. You might have different types of contracts that typically get reported on together. So you want to be able to access them much more easily as far as conglomerating the reports, well, or consolidating, pardon me. Set up as many of these schedule types as you like, and then you go ahead and you can filter on a schedule type when you're cutting invoices or cutting reports, whatever it is you want to do. So I just left mine as demo, I'm not going to change that. My schedule number, my case, it's sequential. You can put whatever you like in here, but I have it, so this is schedule 84. I automatically know I've got 84 schedules as far as this type of schedule in my system. And this description, I like this as from an accounting perspective, simply because if 3 months down the road or 6 months down the road, the original description makes no sense anymore, you can change it. It doesn't change anything in the contract, it just changes the description and that's it. Now, my customers, you notice if you're used to the Fabricam demo environment, you'll recognize this right away. This is advanced. I click on customer number. What I want you to notice here is that it is a standard customer in the GP subledger for AR. There's no duplication of books. When this invoice gets cut for this contract for this customer, it's on the aging automatically, so the finances are up to date, current as it happens. Your terms for payment and so on and so forth all apply based on your GP setup for that customer. We don't go in and change any of that. You've got that customer here. Once we send the data over to sales for invoicing, it's all GP and all you. So nothing has to change in that world for you. End users, well, you think of us at Binary Stream, and we deal with the TM group, and they'll buy the software from us, and perhaps you are the actual people using the software. You call us for support. We don't recognize your name because you didn't buy the software from us. The end user allows us to record your name in there so that we can very quickly take care of your needs, because instantly we know that this end user was a partner of TM Group, therefore we need to take care of them right away, and we will do that. So that's what the end user is for. You might think of other uses for it. You'll notice it's not a mandatory field. It's basically just a tie-in so we know who to take care of and who not to take care of. Up here we've got the multi-element allocation type. This is the ASC 606. Now this particular contract is not going to involve MIRA, but I have another contract that I've already saved and processed that we'll take a look at in a few minutes, so you can see how that actually works in real life and how easy it is. Once you've got it set up, I can tell you in no uncertain terms that there is zero user intervention required, none. That's it. You just simply process your invoice and automatically the allocation to be in harmony with ASC 606 happens. Just a bit of a caveat here or a clarification. We assist with the support of ASC 606 and IFRS 15. Those are big documents, 200 pages plus. We have probably 95 to 99% of it covered. The other 1 to 3 or 4%, very few people ever do. And if we ever need to do it, we will, but we've got you covered for most people. So if you buy the product, in all likelihood, you'll find that everything you need to do with ASC 606 will be covered. If some little piece is missing, you just let us know and we'll take care of that. So now I've got to continue on the header. This is a new contract. My billing frequency is monthly. And as you can see, there's quite a few options in here. So pretty well whatever you need for a billing frequency. And I should stress this at this point. These are all defaults. These are all things that can roll down to the body of your contract, but don't have to. So I'm going to leave that at monthly. Not going to change anything there. My start date, I've typed that in obviously. So July 1st, 2019. The occurrence field simply says, all right, if my frequency is monthly and I'm starting July 1st, 2019, then I can calculate based on the number of occurrences when the end date is going to be. I don't have to type the end date in. Once I check the frequency, put it in a billing start date, put it in the occurrence count, it's going to calculate the end date for me. Minor, but you know, if you're doing dozens of contracts and you happen to have the nice job of doing them manually, you don't want to have to sit down, look up a calendar, and figure out the end date. So it's a nice little thing that just makes life a little bit easier for the user of the product. Now, we can renew contracts on a regular basis. We can renew them manually, or we can put an automatic renewal template in here every 12 months, whatever the case might be. We can even have a template for Milestone. And I think Brian alluded to Milestone just briefly. You might have an event or a process or a contract, maybe even a better way to explain it, that says we're going to implement software. We're going to train you in using the software. We're going to sell you the software, of course, as well. We're going to help you with the preparation for go live, import your data. Finally, we're going to go live test, and then we're going to actually be there to support you in go live. Those are what, 5, 6, 7 different events? All of them would have on your project plan estimated end dates. I've been around this business for a few decades, and I've never seen a project plan of any kind of complexity fulfill itself exactly as originally put. Dates waver, you can go a week earlier, a week later, a month earlier, 2 months later, that kind of thing. Well, Milestone, and I'll show you that contract in a couple of minutes, simply would not have any end date here. It's waiting for you to say, hey, the software has been implemented. Check, okay, put an end date in, we can invoice for that. Hey, I've trained them on using the software. Check, put an end date in, and we can invoice for that, and so on and so forth, or percentage of completion. And we'll take a look at that as well. So that's Milestone. Now, over here in the far right, just standard information. What am I going to use for an invoice ID for my contracts? What's the document type? You've got invoice or quote, and so on and so forth. What location am I going to use if I got hard items? And basically now, the rest of this is, well, what happens if? What happens if I need to put the contract on hold? Well, I can put the contract on hold. What if I need to terminate? Well, I can put a termination date in, decide whether I'm going to adjust the schedule, just cut it off here, I'm going to charge a termination fee, bill the remaining amount, i.e. cell phone plan, and so on and so forth. Anything done up here will want to default down to all items on the body. But what's good, the good news is everything I do up here, I can do item by item by item and not affect the rest of the items on the contract. So kind of keep that in mind. These are all defaults that can flow down, but don't have to. But the same operations here will also apply down here. For example, if you look along the top, you'll notice I have an escalation button here. If I click that escalation button, you'll see that I can put a start date in, put a frequency, a percentage or a dollar amount, or a CPI schedule. And if I want to, I could put in an end date so this escalation stops at a certain time. I could process this, and what would happen is every item on the contract would be escalated according to those terms. Once again, that can be done at the item level as well. And there's my revenue allocation, which we'll look at shortly. I can actually look at my invoice, what's ready to be invoiced here, next item, and so on and so forth. Now, this isn't the invoice itself in the template form. It's just the dollar amount as to what would be available if I invoice now for this particular contract. If we tie it down to ARED, you can see I've got my schedule number 84 here, and I could change my start date and end date if I want to, if I haven't invoiced already. And I've got some user-defined fields. We won't spend a lot of time on that, but this is a basic sales order module. set of user-defined fields, so you can track that right on a contract, if you will, when you're cutting the invoices, and away you go. Now, oh, of course, I should explain this as well. Not only do we have that user-defined field, but we've got another set of records where I think it's 40 records here, 20 per side, that you can go and stipulate whatever information you like in another set of user-defined fields. So that's the header, kind of the very high-level overview of what's happening to set up a contract. What's nice about this is I could copy this. If I wanted to copy this contract, you can see I can choose what items to copy, new schedule number, there's the company it's going to be, and I could change it to a new company if I want to, new customer, new end user, and so on and so forth. But basically it takes all the defaults that are in an existing contract, pops them in here, and then you can go and fine tune them as you see fit. So basically all your contracts act as templates, which is pretty cool. You don't have to set up a separate template by itself. Now, that's the high level in about 10 minutes. We're going to spend a little more time now talking about what kind of items you can put on a contract. Right here in the middle, I've got a piece of hardware. Typically, that's a one-time item. So let's open up the detail here for this item. So it's a hardware. The price came right from GP. You notice I've got a standard extended price option here. That's the price that's in GP on that item number. So it simply populates that here. If I wanted to, I could have said, no, make this a flat amount, i.e., override the price that's in inventory. I could have, and I could have put any amount I like in there. So if you're importing contracts from outside, which you're perfectly capable of doing, and you wanted a specific amount that's not based on the inventory price, you would just simply in your import file check flat amount and then post your dollar amount. If you were just bringing in a standard price, you just simply say, hey, it's a standard price. You don't need to also import the price because that's going to come from GP itself, from the inventory module. So I've got my start date, my end date. This one's only 1 month. And you notice my billing frequency, it says one time. Pop that open, and you'll notice I've only got detailed data on one line, and look at that, standard invoice 2512. So if I click on that, can I go see that? There is my actual sales transaction. This is the zoom, obviously, with all the items that were invoiced at one particular time. That's the invoice number. And this, by the way, right here, the service contract was also an item that, because it's an annual contract, was deferrable. And we'll see how you didn't have to worry about that. You didn't have to do anything with that. It just simply happened. But back to the hardware item. It's done. As you see, it's invoiced. The box is checked as processed, and you're finished with that item. So I close that. Excuse me. Go down to my usage item now. And you notice the item type is now metered. I've got metered, milestone, and goods or services, different standard item. So my milestone could have been here, but we'll go look at that in a couple of minutes. But in this case, I've got metered and its usage, and my price is $165 per unit. Let's open this one up. My details here. You notice this one is monthly, ending in 2022. So if I open up that little blue tab, scroll down to the bottom, it ends in 2022, June 30th, 2022. So every potential thing that can happen is being recorded here for us. So you'll notice that I've got reading for the first couple of months. You could, if you so desire, you could estimate a consumption for the rest of the contract, and that would help you with guessing at future revenue or forecasting future revenue, if you will. Just keep in mind, if you forget about that fact and you haven't imported your update and go and invoice for it, you'll be invoicing likely an incorrect amount. So most folks just leave that at 0 and live with the fact they can't forecast because it's all zeros. But you'll notice 165 an hour, there's my invoice, there's my invoice number. So these two items are on that invoice we just looked at a couple of minutes ago. Now, on this particular field, if I scroll back out of here, you'll notice that we've got the ability to have different pricing options. So I've got standard, tier, and flat tier. So what exactly does that mean? Well, standard is just your base price, whether it be flat or extended, just whatever that dollar amount is, that's what it is. Your tier pricing works something like this. 1 to 100 might be $1 each. That's the simplest numbers I could think of. The math is easy for my head. So if I buy 50, I pay $50. If I buy 75, I pay $75. Doesn't matter, anywhere in there, I pay $1 each. But I might say, you know what? From 101 to 200, they're going to be 75 cents each. So what happens when I buy 150? Well, I pay $100 for the first 100, they're $1 each. I pay 75 cents for the next 50, that's $37.50. My bill is $137.50. So it's not a blending and an averaging. It's you pay $1 each for the first 100, 75 cents each for the next 100, and whatever ranges you've got, and so on and so forth. Flat tier is a little different. I think of it as internet usage. I know when I buy the internet, I say I want a certain bandwidth, and I might pay $50 a month for that. Well, if I start to go over that bandwidth, you can be sure the telco is going to ding me for that. They're going to make sure I pay a little bit of a premium for going over what I bought. So I might say, you know what? I'm not going to pay that anymore. I want the next level. Might be $75 a month, but I'm going to pay that $75 a month, whether I use 50%, 75%, or 100% of it. So that's flat tiered, a little different than the standard tier. And I could drill into this and also add, I think Brian alluded to this in his presentation, I could say you're going to have free quantity per period. You're going to have free quantity cumulatively for the whole contract. You could have a min-max by amount or by quantity. So I think of the min kind of like a retainer for a lawyer. You might pay him $1,000 a month whether you use the services or not. But if you use the services and the bill is a little over $1,000, you're not paying for the retainer as well. You're just paying the total bill for that month. And maximum's the same way. Most of the clients I talk to don't want to talk about maximum, but you can do max as well as min, and you can have free quantity on any particular contract. So let's take just a second and take a look at this tier and flat tier. I go back to my GP item, go to my price list, and you'll notice on the price list for that item, for those of you who are comfortable with this, I've got my range in here. So that's what in this case I got. I didn't do it right. My bad, guys. I would have a range of 1 to 100, 101 to 200, and so on. Each little line would have separated off here, and all together automatically then the system will pop in here. It will look at that usage, and I think, give me a second here. You know what? I want to show you one because I'm going to pop over to administration inventory. Give me just 2 minutes, if or less. And let's look at a tiered price or single tiered, which is 1-. I think I've got a tiered price item set up here, and I'll show you that very quickly. There we go. All right, let's back up here and go to my price list again. So you notice I've got 1 to 100, 101 to 200, 201 to infinity, and I don't have to do it in groups of 100, but as you can tell, any range that I like, and there's my price combinations as I walk down that tiered pricing. And my flat tier is there as well, so I can say that 200, 100, whatever it's going to be, my flat tier price, if I had one, would just come in here as a dollar amount for whatever I'm going to pay for that range, and so on and so forth. So very, very quick and easy. Not a lot of difference in the way your item price list looks right out of the box with GP. So go back to the contract. Oops, wrong contract. That's my Power BI. Sorry about that. And right there, I believe is my contract. So I think I'm going to do it this way. I don't want to make this any more confusing than it has to be. So we'll go back to my advanced recurring contract billing, and let's pop open the billing schedule. All right, so there's that billing schedule with both a tiered pricing, a usage item, min-max, all of that in the one particular form. There you'll notice my service contract, this is the last thing we'll talk about here, you'll notice I have ARED tied in with this. If I can go in there and take a look, it's going to be a 12-month monthly contract. It's going to start on this particular date. It'll be one schedule. It'll be recognized here in this GL account, and away we go. So automatically done. The moment I invoice for this item, that service contract will create, or that invoice for that service contract will create a deferral schedule that the salesperson doesn't have to know is happening. The AR clerk entering the invoice, if that's what's happening, doesn't have to realize it's going on. It's just done automatically in the back end. Now, a couple of things quickly to take care of the last couple of items. If I look at my billing schedule, 81, let's pop back to 81 here. You'll notice that this is a schedule. It's got a bunch of items on it, and the M- is my way of recognizing that I've set these items up to be compliant with ASC 606, and I've set them up in a table. As a matter of fact, let's minimize this for a second, and let's go to multi-element revenue allocation and look at my standalone selling price. So I've added them to this table. Once I've added them to this table, pick the standalone selling price. That's not pronounced fair value method, that's pronounced standalone selling price. And I could pick whatever standalone selling price I have available to me here, amount, sales amount, percent of item, list price, and so on and so forth. Put those proper amounts in if needed. From now on, every single time an invoice is generated with a group of these items on there, and we say it is ASC 606 required, it's going to break that invoice up, that contract up, to the appropriate types of dollar amounts that will go in the P&L, which will be different probably, than what's going to show up on the invoice or on the contract itself. So now let's go back to that contract and let's take a look. I've got 95, 6, and so on and so forth there, and I got a discount, $1,500 discount. And as you know, ASC 606 says, no, you don't. No such thing as a discount. You can't do that. So let's get rid of it. So I go up here to revenue allocation, and you'll notice that there's all my price, including my discount. But when I come over here to the actual contract revenue, there's no discount. Instead of $8,000 for the hardware, it's $76.88. And you can do the math on the rest of it. So everything's a little bit less because the discount has been removed and reallocated across each and every item based on its standalone selling price and the volume on that particular contract. So this is what will show up in the P&L. Trust me, your auditors will like that. You're going to be in harmony. This is what you might see on the contract and on the invoice as well. So the customer's happy. He sees a discount of $1,500, but you don't have to worry about that showing up where it doesn't belong because GAAP says no. There's no such thing as a discount. There's no such thing as free items. Allocate that over the actual items on the sale, and away you go from there. So that's the very high level of how Miro works. Make sure that ASC 606 is covered for you. One other item I want to take a quick look at is number 79. Let's clear this. I want to find number 79, which I believe is right here. Now what we're taking a look at very quickly is your milestone setup and configuration. I've got them on separate contracts because the contract gets big and bulky when you're trying to show everything in one contract. So I've set them up uniquely. Now here's what's happening. I've got a there's my main contract item. Those little links are telling me that these items are linked to this milestone. So what's the big difference? As I was mentioning earlier, it's just this, no end date. If I put an end date in, that means that particular item is ready to be invoiced when I run the June invoices. If I was to type in here September 3rd, September 15th, when I run September invoices, this line item would be billable at this amount. And the whole thing altogether, when it's finally done, will add up to $74,500. The first line doesn't get invoiced. All the components do once you've put in an end date. And that's really all there is to the milestone configuration. You can have as many of these as you like. You can have them by percentage. You can have them by per dollar amount. You can have them by fixed amounts. You can have them by percent of completion, whatever you need to make sure that you cover all of your milestone needs on a particular contract. So let's pop over now and take a look at one other thing I want to show you on a schedule. I'm going to go right back to the beginning here. And I'm going to pick, let's see, I want schedule. Can I get there quickly this way? Number 14 is what I'm looking for. So I guess it won't take me too long. Number 14. So another thing that's just worth noting, here was a service contract that was selling at $1,200 a year. But you'll notice that familiar little return or credit memo attached. If I highlight this, go down to the detail, you'll notice that there's the credit memo here. If I highlight any line, I can hit that little blue arrow, and I can actually go see the actual credit memo that was created within GP. Our product will automatically pick that up if it's touching an invoice, like this case here, invoice number 2289, and just let you know here when I'm looking at the contract information that there was a credit memo applied and taken full advantage of, if you will, by the customer for that particular line item at that particular time. So that's the contracts at a very rapid, extremely high level. Hopefully it's got some questions that I've raised in your mind as to how it can work for you. Let's take a look at the tie-in with ARED. So I've got this service contract item. It was for $1,200. If I go to my ARED module, and I will go back and show you invoicing in just a minute. Take a look at my recognition schedule. Let's go to the very last one. Service contract, August 16th, Adam Park, invoice number 2511. And there I go. I've already recognized the first two pieces, and there's what's going to happen down the road. What's interesting with us and our deferral product, since we do not post to future periods, we simply capture the information within the SQL database. We allow you to do things like this. Oh, that should have been 24 months. That should have been 12 months. Let's change that. And all of a sudden, when I want to recalculate, yep, now I don't have a 24-month schedule anymore. My dollar amounts have changed and adjusted. Everything after that particular recognition of the first line. Or I could actually change the start and end date. Or I could say I don't want equal per period, I want per diem. Let's try that again, see if it works for me. Now I've got per diem instead. And as you can see, I can take away the prorate. I can do whatever I like to the remaining unposted recognition journal entries because they're sitting in a balance sheet. I'm not changing the dollar amounts. I'm not messing anything up in future periods. We're going to recognize the schedule when the time comes to recognize it. So how does it know to automatically take the service contract and do this? If I go back to the item number again, you'll notice this is a standard item maintenance card, except we've kind of thrown in this little section down here saying, hey, this is deferrable. Check if it's deferrable and you actually invoice for it, how do you want to do it? It was 12-month monthly. If I was using Milestone, here's the defaults. Here's my deferral accounts, 2100, 1400, that's what's going to go on the balance sheet. And where it's going to be recognized, 4100 is where it's going to be recognized. So the system knows when this item gets sold to automatically post that deferral schedule. Don't put it in revenue. Take it right out of there, right off the bat, and just put it on the balance sheet and get it ready to be recognized when you want to recognize it. How easy is it to recognize? Well, again, multi-entity. I'm going to redisplay here. Yep. So as you can tell very quickly, what the system has done is it's gone and taken a look at every single item, every single deferral capable product as of the date of September 10, 2019. And all I've got to do is go check and just highlight them here. Sorry, check it and continue on checking all of these ones, mark my selected, mark the next one, or select them all. It doesn't matter. And I would simply have to process this, create a batch, of course, and away it would go and create the journal entry for me. And of course, if I've got a lot of deferral schedules, I can summarize the entry. So I don't have a 40,000 line journal entry. Really, really simple. And finally, I can also inquire and report on this. For example, if I wanted to take a look at a grouping based on deferral account, which is the most common one, and we'll say based on 12/31/2018, maybe at the end of my fiscal year for all my companies. Let's redisplay. And it's going to go in here. It's going to populate everything at that time. Now this is pretty detailed here. Kind of hard to get any information out of that other than the subtotals in the bottom. 400,000, 50,000 has been recognized, 348 to go. Or I could dump it to Excel and analyze it, or I could print me off a little report that we've designed here. And now this is the summary, but obviously the detail will give me more information. But there's my account number. There's what went in. There's what's been recognized. And there's what the balance is as of the end of my last fiscal year for every single deferral account that I set up in my system. Pass that to the auditors and away you go. Or dump it out to an Excel file for them, give them that, and away they go with all the details they want to analyze all this information. So reporting is great. Very similar to that, back to the advanced recurring contract billing, if I now want to create invoices as opposed to the journal entries for the deferral schedules, I go to my invoice creator. We're going to say as of 08/31/2019. Keep forgetting it's that year. The batch, as you'll see here, is just a simple everyday sales batch from GP. Now I've set my as of date. That's not where I want to go. I'm going to say 08/31/2019. So my invoice date, my as of date match. Now this, when I hit redisplay, will probably take a few minutes because I have been negligent in invoicing for my contracts. I've got some that are a year old. I should catch that up. So what this is now doing, as you'll notice by percent complete, it's looking at every single contract that I have in the system, every last one. And it's looking at every line in that contract that has not been invoiced up and including August 31st, 2019. And it's bringing it in here for me and allowing me to go ahead and decide what is it I want to invoice or not. So I could turn around here and I could say, I'll take this one. I can shift click, control click. I can just select them all, whatever I need to do. Now, I've selected a few here. We've added a little functionality that allows us to say, is this valid? Will this invoice validate up top? It's going to run a report for me very quickly, and it's going to tell me if there's going to be any errors here. Success, success, success. Oh, number 82, no meter reading data. So I did not import my usage for this particular professional services on schedule number 82. So I can still go ahead and invoice the rest. I can come back and fill this one in later. At least I know right off the bat why this is missing. I didn't import the usage data for that particular one. Could be any number of reasons, but not that many, I guess. You could have no price on the item, that type of thing, and that's about it. Again, I can dump it to Excel, but something else I kind of like here as well, a lot of columns. I mean, I can scroll across here and get a lot of detail. Some of them aren't very pertinent to me. So I can go up here to user preference, let it pop down here. Now I've got it grayed out right now, but I could walk down here. I could get rid of the company if you don't need that. I can get rid of the comment fields if you don't need that. I can resort them by this here, so I get to see the information I want up front at the very beginning on the left-hand side here, whatever I need to do. And that's my user preference. Somebody else might sign in and have a different user preference for themselves. That's fine. So again, dump it to Excel, or because I've selected those already, I could just process this. I'm going to now process invoices. It looks like 5 of them. That's processed. Let's go take a look at this. This is my exception report. Invoice creator log. Those are BSSI report pieces of information. It's going to pop up and it's going to tell me no meter reading exists. I knew that. I validated, so I already knew that. But it's also going to tell me that I've got, now it's repopulated the field for me here. I've got schedule number 79, 82, and 83, and invoices were created for them. 2513, 2514, and 2515. Those are actual invoices from the sales module in GP. Now, if I wanted to, I could just open up the batch number here. I could take a look at it. I got 180,000 there, and I can post the batch rate from here. I'm not doing anything fancy. I'm just simply posting the GP batch because I have, as a user, the authority to do that. That's all. Nothing extraordinary there. But I do want to emphasize that what's happening is we're sending the invoiceable data to the sales module. GP is taking over and controlling all of that activity. There's no doubt most of you can take a look at this report and say, oh yeah, I recognize that. That's a standard sales posting journal from GP. And that indeed is exactly what it is. So that invoice is now done. That batch has now been posted, and I can continue on and go ahead. So I've got usage, I've got meter items in there, I've got one-time items in there, I've got deferrable items in there, I've got milestone items in there. We've already taken a look at how it ties directly over to the ARED module. We've taken a look at the milestone aspect and setting that up. Works very, very slick, very, very quickly. Now I want to report. I want to see what's going on with my tool here. I could look at my inquiries. There's a lot of different escalation reports, detail in the schedules, and so on and so forth. Or on the hard-coded reports, I could come in here, and again, you could ignore that. We'll pick a particular MRR report up here. I've got it for 2017, so just let that stick for now. Click on Run Report. Now, I ran this earlier, but it was about half an hour ago, so it might take a couple of minutes to bring up and populate. But the reports, while I'm waiting for that, the reports that you see over here where my mouse is circling, these are SQL Server designed reports, meaning they're accessible outside of GP if you want to give people access to them. They're very, very common tool that comes with GP. So you could build all your own if you like. There's no restriction in whatsoever in any way in using the data that you're capturing with our tool, with our product, because it's yours. It's your data. It's going to be stored in exactly the same database that the rest of your GP is stored in. So you don't have any worries about data corruption unless you're worried about your whole database corrupting. But the bottom line is, as you back up your GP, you're backing up these modules as well, because again, they are modules of GP and the information is stored directly in there for you to go and take a look at as needed. So here comes the report now. Once it pops up. So you'll see basically what this is beginning MRR, new sales renewals, kind of the standard monthly recurring revenue report with the capability of drilling down to any particular month you want, including future periods. If I would have put 2019 in here, December 31st, but I can go ahead and drill down to any of these periods. And when I do drill down to those periods, what it gives me is a contract by contract, item by item description of what happened in that particular month, July 2017 in this case. And again, because it's SQL and because it's SQL Server reporting, I can dump it out to Excel and I can analyze that information outside of the system without worrying about harming anything within the system itself. Let me just close this off here. I apologize. That popping up the last minute. So basically, that's how easy and how quick it is to run information from ArcB, from ARED, capture all the mirror requirements that you want to capture. Very, very little to no user intervention required for a lot of that functionality. And one final aspect on reporting, we get asked this question a lot. If you happen to like Power BI, well, there is Power BI with our advanced recurring contract billing information in there. So I got my customers, my item numbers on the contracts, my years And of course, you can design this to tell you anything you want it to say. It doesn't have to be by year. It could be by continent, it could be by region, sales zone, whatever the case might be. I can just click on anything here and change it. Click on Adam Park, for example. And all of a sudden my numbers will change, my dollars will recalculate. So it's a standard Power BI report that's built in and can capture all the information that you're managing with advanced recurring contract billing. So a very, very powerful tool from that aspect for you, just in case you want to take a look at other ways you can grab information from the product. Now I've got maybe 2 minutes left. The final thing I'll show you that I like as a frontline kind of guy is in the smart list world as well. If you wanted to, you'll notice here we've got property management, multi-entity, other tools. But if I wanted to make a report, a unique report on ARC-B or ARED, I can click on New here, and I'll just scroll down to the database view, and you'll notice if I scroll on down to the database view, I have advanced revenue and expense deferrals, advanced recurring contract billing, and there's my modules. If I want to go in and take a look at the different modules, I can go ahead and build all the reports I like, tie them together with the rest of my GP data if they are connected with contracts or deferral schedules or ASC 606 requirements. So I not only have these reports available to me here and these inquiries available to me here, but I can also go into Smart List or build all the reports I want with SQL Server reporting services and have a great time getting information exactly the way I want it with very little issues. And guys, I think it's almost 10 to the hour. I should open up for some questions, Brian, so perhaps back to you. Uh-oh.
I'm unmuted now. Just
okay.
I don't see that there's any questions. Let me just make myself the presenter. I don't see any questions that have come in. Ali, do you have any on your end?
No, no question.
Okay.
Okay. Do you have anything further that you want to say?
I was just going to go. Don, do you want to pass control back to me? I'll show the closing slide there with some contact info and such. Perfect. Thank you. So yeah, for next steps, we do have some product info sheets that are available if you're interested in them. I don't think we shared them earlier during the go-to meeting, but go ahead and let me know. My contact info is brian@binarystream.com, or of course you can send it to the sales@binarystream.com address that's on there. Last question, or one question that comes up sometimes is, with respect to industries, like I mentioned, there's not a particular industry that this product was designed for. Sometimes it's software that tends to be the most prominent, and I think that's because that's Binary Stream's background. We developed this product in part to meet our own needs. So things like Don showed you with respect to being able to bill the TM group as the VAR, but then actually know that it's for a specific end user, that's something that I think makes sense to a lot of software companies and other people that have an indirect sales channel. So if that's you, or if that could be you in the future, if your distribution models change, definitely let us know. I think it could be a really good fit. We do have other recorded videos available online, so if you go to our website or our YouTube page, you can take a look at those, share them with colleagues as needed. But most importantly, if you do want further information and to get things like a price quote or just a quick discovery call to see, is this going to be a good fit for my specific business processes, go ahead and reach out to your reps at the TM group, whether that's Ali or one of the salespeople there. Get a hold of them. They know how to get in touch with me. We'll be glad to book a one-on-one demo. So that's everything for today. Thanks very much for the time and have a great one. Thanks, Ali. Thanks, Don.